In this video, we're going to look at what is the abandoned baby candlestick pattern. Stay tuned. Hey traders, a very warm welcome to you. Okay, so candlesticks, pretty useful tool for traders to make trading decisions with. Loads of candlestick patterns out there. However, I want to look in this video at one in particular called the abandoned baby. Why is it called abandoned baby? It will become clear in a second, but why do people come up with these ridiculous names for things? I don't know. Why call it an abandoned baby? Anyway, let's have a look at what it is, and then more importantly, let's look at potentially how we can use it to make better trading decisions. All right, so we have two scenarios here. We've got a bullish scenario and a bearish scenario. And excuse my candlestick drawings here, but hopefully you'll get the idea. Okay, so bullish abandoned baby scenario is this. We have a market that's moved down, and all I've got in this scenario, all I've got in this kind of diagram is what's required to qualify as an abandoned baby. We're going to talk about towards the end of the video about how we can put this into a framework of a larger time frame and make some better trading decisions. But generally speaking, abandoned baby has to have this. You've got a down move on day one, this is indicated by the red candle. Then on day two, you have a gap lower. So the low of the prior day is here, as we know the low of the candlestick. We've got a gap lower, and we've got what's called a doji forming, which is an indecision type of candlestick. Not a very big range generally. The open is the same as the close, so you get this cross format, which would say, hey, there's no body to it, or it's got a very, very thin body. It's nothing much has happened. We've gapped lower after a big move. We've not filled the gap. The high is lower than the prior low, and we've just sat there and gone, what's happened? The next day, however, so day three, we've got a gap up above that doji high, so above this high point here. We've gapped up to here, we've rallied on the day. The low of that day is still above, so there's fresh air in between. If I can just about do this without ruining it, that's our fresh air. So that gap has been unfilled. And the next day, we have a bullish move, a nice green candle, sort of rallies from bottom to top. So what does that actually mean? If we look at it, in fact, you know what, let's go on bearish first, which is exactly the same, but just obviously in the other way round. We've got a good bullish move. We've got a gap up on day two. And day two, we have the indecision doji. And on day three, we have a gap down. So again, important thing is to qualify as the abandoned baby, we've got to have that fresh air zone there, and then we have a kind of change in sentiment that pushes down. That's the key to this, guys, is it's a change in sentiment. These things are pretty rare because, you know, to have a gap in the first place, and obviously we're not talking about, generally we're not going to be talking about Forex here, because to have two gaps in a row, it's not going to happen. This is more like a stock kind of event, or if you're trading a cash index, something that's got a definitive or definite close and open. So this is rare because you to have a big gap outside of range is reasonably rare, but then to have another gap back the other way is quite rare. So if we see this, we want to pay attention to it. Why do we want to pay attention to it? Well, just think about what's actually happening here. You've got a scenario here where, you know, the market perhaps has come down a reasonable way. You've got a bearish move on day one, you know, kind of a pretty solid red candle, pretty standard dark red or whatever have a color you've got in your chart, candle indicating, you know, we've got a supply demand imbalance, a lot more supply coming in than demand, and we finished on lows. It's a bearish day. Put it down as a bearish day. Next day we gap lower. So bears or sellers are kind of saying, okay, it's just a continuation now. It was a bad day. Maybe it was a catalyst from news, whatever it may be. We've gapped down on the day, and then we kind of just sit there. In other words, sellers don't become extra aggressive. They back off a little bit more, and maybe some buyers step up. Either way, we're in a little bit more of a neutral situation. And so that's okay and probably quite normal. That maybe the next day we'd expect a continuation. But then something happens, whatever it may be. It could be news again, it could be a catalyst, could just be just changing sentiment, whatever it is that causes us to gap up above that high. It's the change in sentiment that makes this such a powerful candlestick pattern, because we've changed sentiment so quickly and so aggressively. You know, a gap up above out of a range is an aggressive change in sentiment. It's not just a small gap from the close. You know, a small gap from the close will be there. That's not It's okay, but it's not as aggressive as, hey, right out of the range. So literally every single person who has got involved there on the short side is struggling. Every single person who got involved on the long side is very, very happy. We're changing the emotional framework of what's gone on. It's caught a lot of people out potentially. If it's enough for it to gap above that high, it's obviously a significant event that people believe at the open it's worth revaluing to that level. So it's a good thing to watch that, because not only is it significant enough to gap up, but conjunction with the prior day one bearish move means that we've got a big shift from one way to the other, not necessarily neutral to aggressive. We've seen one way supply, 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 and then a massive shift back into demand, all within the space of kind of a 3-day period. And same with the bearish move. So where could we fit this in our trading? So let's say we've had an uptrend and we've kind of pushed up, and then we see this kind of scenario. What would we do? Textbook says that we would short this on the close here, or we'd buy it on the close here, and then we'd hold it for a multi-day move. Our stop would probably have to be either above the high of that, or probably, to be fair, you'd probably get away with putting it there. So there would be your stop loss above that high there on that down day. Your short would be on the close, or if you wanted to be a little bit clever, probably you could take it a little bit before the close if that was going to form anyway. Let's say you're right in the bottom of that range and you're coming to the final hour and you thought, you know what, I think the final hour might even press down even more, maybe get a bit more juice from the trade. But let's keep it textbook for now. Textbook is you short on there, and then your target is going to be whatever it's going to be. And by the way, this candle could be longer. I've only drawn this for kind of image purposes, that it's not quite as big as that. It could be even longer than that. And obviously the more aggressive the change in sentiment, or the more aggressive the move after that abandoned baby, the more likely we're probably going to get some continuation, because that supply demand imbalance is so shifted that way. So that's something to look for, guys. Pretty rare out there. But if you see one, maybe take note, and maybe there's a trade opportunity to be had from scanning for these kind of things and putting one of these setups in your trading plan. All right, guys, thumbs up if you like this kind of stuff. And if you haven't subscribed yet, consider doing so around about here. And I'll see you in the next one. Take care. Keep the risk managed. Bye-bye.